Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Well, hello, folks. Morning. Welcome to Wealth Coffee Chats. Hope you're well. Good to see a few of the early birds up and at it already today. Apologies for yesterday. Didn't make it to the show in the morning. Had been away for all the weekend and was a little bit worn out. But anyway, hopefully you're all well wherever you are, folks. Good to see you. Thanks for joining. I'll do the quick intros and warm-ups and welcomes as we get things going today. Jason Witten's my name. If you didn't already know that, some of you do, most of you do. But if you don't, welcome. Thanks for joining us this morning on this terrific Tuesday, 10th of December. Christmas just around the corner. Crikey. Rolling up on us pretty quickly, isn't it? Hey, listen, this is a show we do each weekday throughout the year. Have been doing it for about 4 years now. And what's it all about? Well, folks, I've been a property investor for well over 25 years. Created a business with my business partner, Sam and Shay, business partners 22 years ago. And ever since then, we've been helping Australians and New Zealanders buy and invest and keep, more importantly, keep, for crying out loud, their properties for their long-term investment wealth creation. So each day, each morning, get together with you guys on this little wonderful bit of technology called the internet, live, coming to you each day at about 10 past 8, just sorting out a bit of fear from fact about property investing, about investing in general, folks. Let's face it. The longer term view. If it's a get rich quick scheme you're looking for, well, this is definitely not going to help you right here. Can't help you. Property is slow, pretty simple as far as I'm concerned. There is some twists and turns, but if there's any secret, and there's not, by the way, just so we're really clear, if there's anything you might call a secret, it's about buying good properties and keeping them for the long run. Minimum 15 years. That's the gist of it. Anyway, buy well, don't sell. And when you do sell, because you may, make sure it's strategically for transferring your wealth from one place to another. That's really the conversation. Hey, good morning, Sonia. Good to see you, mate. Thanks for jumping on, as always. A few of the regulars here, which is awesome. And if you are new or even one of the regulars, give us a shout out in the chat. Great to hear from you. It's awesome to have you in the house on the live stream this morning. Hey, listen, I thought we would talk about a little bit of something this morning that I found quite interesting. And we've been talking about this stuff for a little while, about the increasing prices, but the things that are happening that are underlying the property market in and around the property world. The idea that the sale prices per square meter rate. Now, it's quite difficult. It's quite difficult, folks, to make sense of things when it comes to working out prices and values and what something's worth and all these sorts of things, right? But one of the really important numbers to understand is the per square meter rate of property sales. Per square meter rate gives us a very interesting analysis of what's going on. Now, in the world of brand new construction, that's a lot easier to understand. But in the world of secondhand or pre-owned real estate, it's an interesting one. It's an interesting one that we want to have a little understanding and look at, okay? Because we're seeing the first shoots, certainly in certain places, which I'm really, really quite interested in, of the cost per square meter getting into a territory where we've only seen newer properties be for a little while, right? The per square meter rate. Now, in places, depending on where you are right now in Australia, in the world of new properties, in the previous few years, 8,000 to 12,000 a square meter was kind of where things landed, right? Where things landed. And of recent times, we've seen construction prices rise pretty quickly, and also construction companies have challenges staying solvent. But all in all, folks, the value or the price of per square meter has skyrocketed. And we're seeing the world go like this now, where the new world is 15,000 to 20,000 a square meter when it comes to property prices. The interesting thing is it's been very rare that the second-hand market, the pre-owned market, the pre-loved market would be in and around those prices because it's not new, the underlying value, whatever it might be. But we're seeing the first green shoots of this, and I wanted to sort of talk about why this might be the case today when it comes to these sorts of things. Now, this property here sold over the weekend or maybe last week in Tweed Heads for $850,000. Now, you'd think, all right, $850,000 for a 2-bed, 1-bath. So $850,000. Follow along here, folks. All right, $850,000. And tell me why you would think it'd sell for this price, $850,000, and it's 41 square meters. 41 square meters, folks. That's not a big apartment, right? Secondhand, 2-story walk-up, 41 square meters, right? When you do the math on that, right, that is 20,000 a square meter. 20,000 a square meter for a secondhand property. Now, for some of you listening in, this might be flying over your head and you go, what the hell is Jason talking about? But what this is showing right now is that pricing compression, where the secondhand market has been a lot lower than the new market, and we're starting to see the shoots of the secondhand market now matching the brand new market or catching up in certain locations, in certain positions. So this is a really interesting one. What does it mean? What's the indicators here? We'll talk about that in a second, all right? So hang with me. So this is an early indication of what's going on. Part of what's going on, especially where I live, I live in the Gold Coast, so this is quite interesting to me, but you can see this happening in many places right now, is that we have, let's undo that. We have, and tell me in the chat, folks, what do you think? What do you see here? What can you see? What do you think about this? What is happening is the house prices, so houses have gone up a lot more than apartments, all right? That's an apartment. Terrible drawing, okay? And the prices of the apartments have been a little bit less. So the affordability for people to buy a house has reduced, and now pushing people into the apartment world. Okay. So this is it's an interesting thing. Now it's starting to happen everywhere around Australia. And for you and me, we need to keep an eye on what that means, right? What it means to the next cycle of the market. Not only do we have some other things coming, but this stuff is starting to now, the gap between new and secondhand is starting to get compressed. And that's an interesting piece of the market as well. Now, it's not like this property was anything special, by the way. Check out the location. It's not like it's over here. It's there. No water view. It has no view of the water, right? Folks, no views of the water, right? 20,000 a square meter, 20,000 a square meter, no view of the water. It's a location purchase. It's a location purchase, okay? Now, hey, morning. Hey, Pat, how are you, mate? Good to see you. And Jeff's in the house. Morning, Jeff. So, you know, it's no water view. You still have to walk to the beach. There's no lock-up garage. You know, the amenities is pretty average. So what does that do now, or start to do, to sort of properties like this over here, closer with water views? You know, that one there is under construction. It gives this value that's going on, right? So what we've had, you know, what does it all mean? I'll bring it to a point right now as we look to next year's marketplace, right? And we go, all right, well, 2025 and beyond, what's going to happen? What's going on? The house prices have already gone up, right? The unit prices are flat, and the gap between these two is now starting to close. All right, that's happening, and also the second-hand market and the new market has also a gap, and a lot of the time, there's a disconnection when it comes to the valuers and the value of a property, because a new property could be worth, let's say, $1 million, but you could buy a second-hand one for $700K, which has the similar style, size, whatever. Not as new, obviously. So that gap now is closing. It's closing as well. So not only have we got pressure, folks, on the house and unit price, but we're getting pressure now on the new and second-hand price. Now that's compressing. What does it all lead to? It really just reinforces where we are in the market, team. All right. Supply and demand down. Oh, well, not supply and demand. So demand up and supply down. We have the worst construction starts in Australia's history across the nation. Now, there's some place better than others. Melbourne's going to have a little bit more supply as you go. Absolutely, Andrew. Yeah, mate, don't get rid of that. Don't get rid of that, mate. That's a cracker right there. DY Studios. Tell you a little side story, Andrew. Back in my day, when I first started getting into property, my DY, there were studio apartments you could buy in DY for $60,000, 60 grand, 60 grand. I should have bought every single bloody one of them. Anyway, the things you know in history, in retrospect, rather than, there you go. So keep it for sure, mate. Yeah. So what do we know? Supply is down, and it's disastrous. Disastrous. The gaps are closing. All right. The gaps between house price and unit price are closing. The buyers can't afford houses. They're going for units. Now, what does that mean? What does that mean? There's certain markets that are going to move a little bit faster than others. The second-hand and new market the gap is closing. Why? Because the second-hand market and the new market now, the supply chain is closing that. So there's another opportunity. We've got the interest rates going to come down. You're already seeing lots of that being baked into the market future. And you're seeing, the population still grow, and there's not enough properties around. All right. I feel like a broken record, just feel like I'm talking about the same damn thing every other week, but it is true. there is a lot of benefit for us to be in position with our property investing. My conversation, team, is that, this year, 2023, has been quite a slow year, a harder year for most property investors and most borrowers who've had a loan. And it's been tough to unlock things or get cracking or get your servicing or do your next purchase. But if you can right now, you need to check in with your team and get that changed, or see if you can get yourself unlocked to buy or get in position for the next property deal. That's my call right now, because there's so much going on. 20,000 a square meter, 20,000 a square meter for a very average secondhand property in not a good spot, right? And you're going to see it. You're going to see it everywhere. I'm calling it early. I called the supply disaster back in 2017. COVID didn't do it. APRA did it. And the supply shortage, the construction shortage, I'm calling it now. These secondhand properties, people will pay now a new price for an old property. That's what's going to happen. It's inevitable. It happens all the time. The gap closes. For some of you, you might be maybe you think I'm gibbering on a bit and have no idea what I'm fucking talking about. That's okay. Sometimes I don't know what I'm bloody talking about. Point is, new properties usually feel like they're overpriced in the start of a new cycle of a market. That's what happens. Sometimes the new properties feel like they're overpriced. You're like, fuck, we would pay that much for that. That's lunacy. And then all of a sudden you see secondhand properties start selling for the same price as the new properties. And that gap, closed, gone. The market's reset. Everyone's going. And then the new property seems like a fucking bargain, is what I'm saying. Anyway, I hope you understand what I'm trying to get at here. Probably should have had 3 coffees as I went, right? Jeff's given. Oh, that's a big call, Jeff. Big call, mate. Don't know if it'll happen today, but who knows, folks? Who knows? Who knows? The RBA knows. We'll see. We'll see. Listen, Jeff, if it happens, it'll be a very bloody Merry Christmas for us all. And if it does happen, folks, I'm telling you, if you don't, just buy some property, some good stuff, for crying out loud. Anyway, I'm a bit all over the place today. Bit tired. I had a long weekend, but I'm here today doing the do. All right, folks, that's it from me today. I better run and leave you to it. But thanks for joining me on Wealth Coffee Chats. It'll be on tomorrow. The property management team and Cass, they'll be jumping on and letting you guys know what is happening, which is awesome. And hopefully you're all awesome and well. Yeah, join us tomorrow. There you go. All right, folks, that's it from me. Take care. See you soon. Bye for now. Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at Positive Mentor.